All right, guys, let's break down the trade I took on Nasdaq on Friday, which was shorts. So what we're going to do is we're going to start off, as always, as viewing the index futures market as a correlated set of assets, also known as a triad, right? So we have Nasdaq, the S&P, and the YM. And what we're going to do is look at the delivery state of all three assets, first of all, to entertain some ideas about our bias for the Friday. So I'm going to use the bar replay mode here so we don't see the day's delivery and walk you through why I was bearish on this higher time frame for Nasdaq for Friday's close. So the first thing I want to pay attention to is the fact that this weekly candle, right, if I mark out the weekly open here, had opened form day low. So this right here is our weekly open. Opened form day low, expanded into the previous week high, and had set a relevant high on that Wednesday, okay? So we open low, create a high, and now I'm thinking that Thursday and Friday should form that close of the weekly candle. So what we're thinking is open, low, high, close. Now, why do I think that this high is going to be the high of the week on Nasdaq? Well, what I want to look at, again, is going to be the correlation of three assets. So first of all, Nasdaq is trading above its all-time high here, right? And we can see that Wednesday puts in a distinct candle to closure, right? We sweep out Tuesday's high, which took out the all-time high, and then we close back in the range. Now we can see this bearish candle close is also supported in structure on Thursday without a strong reversal signature, meaning we do not come into this fair value gap and give a strong reversal signature for me to look for internal to external on Friday. I don't think that this Friday is going to expand into this high because I instead see that the Wednesday, or the Thursday rather, opens, trades higher, respecting 50%, right, equilibrium, that previous candle, and then closes, right, near the low. Now, although it sweeps the low and closes above, I'm still thinking in context of this market based on the other two assets that we're going to have a down close day on Friday. Now, why do I think that? So let's keep this equilibrium mark in here, right? And now let's look at the other markets. Let's look at YM. So as we can see, YM is a very similar story, right? We have our weekly open here, right? We trade lower on Monday, then we expand for 1, 2, 3 consecutive days of expansion. Now, what I know is that after market offers 1, 2, 3 days of expansion into a key level, which is going to be this high, that's the draw, right? The weekly high. I can expect a new phase of price. Now, this phase of price that will occur above this high can be one of three things. Let's just make this look like this or something, right? So this can be one of three things. We can either see some form of reversal, we can see a form of accumulation, or we can see a retracement, right? I know that I'm not anticipating consecutive days of expansion to be met with what? More expansion. So I'm already thinking that the weekly range could be capped up here on our YM as well once we take out this high. So this is going to cap the weekly range on YM, okay? This high. Now let's extend our analysis to the third market, which is going to be the S&P 500. Now the S&P 500, the ES, is giving me a similar perspective as the Nasdaq with one key difference. This is why I use intermarket analysis. So what we can see is that price expands into an all-time high. It comes internal. And look at the closure of this Thursday candle on the S&P versus Nasdaq. This is giving me an indication that we are going to trade higher and cap the weekly range with a sweep of this high. So now I'm framing SMT with the ES here, okay? SMT with NQ here. That's in the context of YM taking out the weekly high, being the strongest asset, and then closing back in the range. The ES taking out this previous daily high, right? And this high. So Wednesday's high and Thursday's high. And Nasdaq staying in a failure swing sequence to these highs based on the fact that the S&P, instead of opening high, open high, low, close on this Thursday, instead opens low, right? Then trades higher and then closes, respecting the internal range of liquidity that we have marked out, and putting in a failure swing to this high. So now I'm thinking the next day's dynamics are ES comes in, forms SMT with NQ, trades lower, closes. Open, high, low, close. Nasdaq will open, trade high, put in an SMT with the ES, trade lower, close, and YM will do something similar, right? Taking out that high. Which market do I want to be a short participant in? The answer is going to be the Nasdaq, right? These confluences lend themselves to me trading Nasdaq lower on the Friday before I even see any of the daily candle form. So now let's hop on to the lower time frame and profile this daily candle. How am I going to profile it? You've seen my protraction profiling videos. You've seen my trade recaps. You know exactly what I'm looking for. I'm looking to trade away from an established 4-hour swing, and I have my key level of interest already marked out on all 3 assets, right? So let's play out a few candles here and see what we can, profile. So what I want to do is play out another candle. If my thing loads. Let's see if I have to undo the bar replay. My trading view's been a bit slow. Maybe I'll try and go onto my Ethernet here for a second. Stay with me, guys. Okay, there we go. Sorry about that. So let's go back to the daily open, right, which is going to be Friday. Okay, so now what I'm thinking, right, based on these levels I have in my chart, is that we're going to form our SMT. So when the daily candle opens, I can see we're immediately validating this thesis. We're going to come in, cap our weekly range on YM here, and put in a reversal signature, take out the high, put in a reverse signature, and Nasdaq can actually offer me a continuation signature because we are respecting bearish order flow, okay? So watch what happens in the next candle on the 4-hour chart, which is going to be our 10 p.m. candle, Asia. We now form that SMT divergence, and now I'd like to see London respect this order flow and trade lower, and trade lower. What's interesting about YM here, which lends credence to my bearish argument? Well, the daily open, right, 6 p.m., if I mark that out, 1800, is a devil's mark on our YM. We open with no manipulation or opposing run of the daily range. This supports a reversal at some point in time back to the open, also known as delayed protraction if you've seen my protraction videos, right? So let's play out the London 4-hour candle. That's exactly what we want to see, right? We're staying in respect of this opposing run. We're now forming a new opposing run here on Nasdaq. Now I'm getting a reversal signature on the ES, right? An early indication that we're reversing is going to be what? Well, we're seeing disrespect of this internal range of liquidity, right? We're seeing SMTs at the highs like we saw here. So now I'm trading the next candle as a continuation on the Nasdaq. I want to see this candle in here trade lower towards the weekly open, and I want to see YM trade lower towards the daily open. That's why the framework for me for sell-side delivery is on Nasdaq. So now let's go in. And first of all, let's play out this 4-hour candle to validate that hypothesis, right? We're back. I'm showing you how I traded this candle. So look at what the 6 a.m. candle did, right? As anticipated, we trade back towards the weekly open to my draw on liquidity right here on Nasdaq. Now, how did I approach trading this in here? I approached trading this in here, right? Looking to identify a manipulation phase of this wick and positioning myself within the wick, right? Looking to get involved in a lower time frame fractal. So I know I have my SMT divergence that's forming here, right? This is our 2-stage SMT divergence. That looks a little something like this. Now what I want to do is find that lower time frame fractal to get involved with and then trade a distribution of price as a continuation of Nasdaq towards my draw on liquidity. So how do I do that? Well, we can just look at this market now, which we're focusing on, which is Nasdaq, and look to frame that lower time frame fractal. So what I'm trading in terms of a market maker model is going to be an internal range of liquidity here. Right? This is a 30-minute SIBI. So we can mark this out, right? This is our internal range of liquidity, and I am trading this towards the external range lows. Now, if you were on my stream on Friday, what I also said I really liked about this setup was the fact that Nasdaq presented me a failure swing signature alongside its correlated markets. What is a failure swing signature? Something that looks like this, where we have a bunch of swings that are relative equal smooth edges. These smooth edges in here, a failure swing signature, is very nice to see for a distribution because we're order pairing internal with the external failure swings, right? And as you can see, the ES is presenting you a similar failure swing signature. And of course, the YM has this devil's mark open, which is a good draw on liquidity. So now I want to see these assets resynchronize using SMT and a swing point for me to get involved. So if you look at the hourly chart here, you're going to be able to see where that SMT forms exactly. It's above the 8 a.m. high. And you'll see, I'll mark this out with a different colored line, like a red line. Nasdaq runs out the 8 a.m. high. The S&P 500 does not, right? We put in these equal highs up here. And the YM also runs out this 8 a.m. high. So if you look, you can see we have another two-stage divergence forming. If I go down one time frame, you're going to see here is our second stage of divergence at 9 a.m. However, the first stage is actually with the YM. So the YM is showing in a two-stage crack in correlation, CIC, with another SMT divergence in here. So when you see me draw out my two-stage divergence like this is how I'm recognizing this as a reversal from internal. I'm waiting for the stop hunt, right? A new fractal. As you can see, 9 a.m. So let me keep that there. 9 a.m. gives me that closure I'm interested in. Now I want to trade a continuation at 9:30, pairing what? Time with price. The driver in this case is going to be the equities open and the news event at 10 a.m. And I am looking to distribute to this low and this low on the YM. Now is when I can use a lower time frame fractal and I can get involved with any form of entry technique. So I see my two-stage of divergence form, right? Let's keep this like that. And now what I'm interested in doing is trading once we have a realignment of order flow. So there's my stop hunt, SMT divergence, changes day of delivery. Now in this case, because we are in, let me use a different colored line here. Because we are expanding far past this opening price of this change day of delivery, I don't want to take an entry here because my wick would have to be, my stop loss would have to cover that SMT wick, and my risk to reward is 1.3. I know I can get a more favorable risk to reward by further refining this area of price. So what do I see in here? Another lower time frame fractal. I see a internal range of liquidity like this. And now I'm going to use this internal range of liquidity as a continuation signature. Once we've reversed, you can see we have a propulsion block which is hit. And I use a 1 minute entry. So let me just make this full screen and show you what I'm talking about. So we come back into this M3 SIBI. And I'm framing a 1 minute continuation because the order flow has reversed. This is the wick of that higher time frame candle in here. So if I was to show you what that higher time frame candle looks like, let's see, I don't have that indicator up right now, but you would see the higher time frame candle looks something like this, right? Where we're going to be expanding lower and we've already printed the wick, right? And this wick in here that we're seeing has already formed with SMT, and now I'm trading a continuation. So once I see a closure through here is where I take my entry. Now I can risk this high because we have internal, an opposing run, closure through. And what I want to do is target now this low, which gives me a better risk to reward, right? 1.8. I actually enter a little bit higher on the retest. So it's about 2R, right? To the draw liquidity. So as you can see, this is aligning, right, our time frames with an expansion phase of price and using intermarket analysis of the triad to get a good draw on liquidity for the day, right? We're using a daily profile of open, high, low, close, and we're also using the idea of the weekly range to cap that idea, right, of a Friday trading lower based on what we're seeing with the other two assets. Okay, so that's a quick little review. There's a lot of concepts covered in there. So if you have any questions, throw them in the comments below. And I might do a few more recaps of other trades I took this week. I got a lot of requests to do that. All right, take it easy, guys.